The market is loud right now, constantly reacting to headlines. And when things get this noisy, it's easy to forget the big picture. So today we are zooming out. We're looking at 10 stocks with real growth potential by 2030. Some of these are going to be names you've been watching, but some are quietly building something big without making any headlines. Let's start at number 10, Pagaya Technologies, ticker PGY. Pagaya processes roughly $1 trillion in loan applications every year. They're not making the loans themselves, they're just running them through an AI system that finds credit-worthy borrowers traditional banks would usually reject. But here's what caught my attention on this one. Last year, they swung from $445 million loss to a $71 million profit. That is a huge turnaround, but the stock is still down over 40% this year, and short interest is over 30% right now, so that is definitely something to keep in mind. Analysts have a consensus target around $33 against the current price around $12, so that is some serious upside if those analysts are right. And number 9 is Evolve Technologies, ticker EVLV. Anytime you walk into a stadium or a school, there's a decent chance you've already walked through one of their systems. You just didn't know it. Evolve makes AI-powered weapons detection that is very different from traditional metal detectors that make you stop and empty your pockets. This is a system you walk through at full speed, and the AI tells security whether you're carrying a phone or a firearm. It's used at concert and sporting venues too, and so far, over 1 billion people have been screened through Evolve systems, and that has translated to some big revenue growth. It's up 40% in the last year, and the company just passed a big milestone with their first profitable quarter. Now, Evolve is not profitable on an annual basis yet, though, but at just over $1 billion market cap, and a technology that is now becoming standard at schools and venues really everywhere, the future runway for this company is very real. And number 8 is Innodata, INOD. This company takes unstructured information, things like documents, images, big chunks of text, and turns it into clean, structured data that AI models can actually learn from. Think of them as picks and shovels on the entire AI system. And this is big. Earlier this year, Palantir selected them to provide training data for their AI programs. That is not a small customer to land. The revenue growth has been strong too, up 48% last year to $252 million. They are profitable, and they've beaten earnings estimates 4 quarters in a row. The analyst consensus target is sitting around $100 right now. That's more than 120% upside potential. Now, the honest risk here is that a significant chunk of their revenue comes from just a handful of big tech clients. So if one of those clients pulls back on AI spending, Innodata would definitely feel it. But for investors who believe the AI build-out is a multi-year growth story, and all evidence suggests it is, you need companies that are building the foundation, and Innodata is one of them. If you're looking for other stocks that are essential in the AI build-out, check out the 5 stocks in this MarketBeat article that are all at the center of the AI supply squeeze. You can scan the QR code or click the link in the description to get that full report for free right now on MarketBeat. On to number 7 on this list. It's a familiar name for many, IonQ. This company is a bet on what computing looks like when we get to 2030 and beyond. IonQ is currently in the lead building quantum computers, and they hold the world record for quantum computing accuracy. Revenue more than doubled last year to $130 million, and they are sitting on over $1 billion in cash. The consensus price target is around $69, which is over 100% upside. Now, whether the thesis plays out is the real question on the future of this stock and its future growth potential too. At number 6 is SoFi Technologies. SoFi is a digital bank many investors are familiar with, but calling this company just a bank undersells everything it does. From student loans to personal loans, mortgages, investing, credit cards, and a banking-as-a-service platform that other fintechs are building on top of. The vision for this company is one app for everything your money does, and they are actually making money doing it, which wasn't always the case for this company. Revenue hit $3.6 billion last year, up 35%. The company also has 4 consecutive earnings beats, and just recently, their CEO, Anthony Noto, bought $500,000 of SoFi stock with his own money. That is a CEO putting personal capital behind the recovery of the stock. The stock is down over 30% this year. It's trading around $17 against a consensus target near 26. The macro environment has been really rough on anything interest rate sensitive, which of course this stock is. But the business does keep improving. And number 5 is dLocal, DLO. dLocal provides the payment infrastructure for the markets nobody else wants to deal with. Global companies use dLocal to accept payments from bank transfers, e-wallets, or cash-based systems, all through a single integration instead of building market by market. And there seems to be plenty of demand for this. Revenue was up 40% just last year. The stock is down a bit this year, not because the business is broken, but because emerging markets make investors nervous, especially when global volatility spikes. Here's the long view on this company. Over the next 4 years, billions of people all over the world are coming online for the first time, and commerce follows connectivity. dLocal is building the payment layer for that transition, and most investors haven't found this story yet. And number 4 is Magnite, ticker symbol MGNI. Streaming is taking over television, but ads are still key to monetizing these streaming platforms, and selling those ads is exactly what Magnite does. It's the largest independent sell-side advertising platform in the space, and their connected TV segment is growing fast. The financials tell a real turnaround story too, and they have wiped out their debt. And they just announced a stock buyback, which is a company telling you it thinks its own stock is undervalued right now. Analysts have a consensus price target nearly double where it trades today. But the important risk to know about this one, the company is in an active legal battle with Google, and the outcome of that lawsuit could move this stock in either direction in a big way. And number 3 is Nebius Group, NBIS. They're an AI-focused cloud infrastructure company that builds data centers and then rents out that computing capacity to other businesses. Just in the last few days, Bank of America initiated coverage with a buy. The company closed a $4.3 billion convertible debt raise to fund expansion, and they announced a new partnership with NVIDIA to build a robotics AI cloud platform. Now, Meta signed infrastructure deals worth up to $27 billion over the next 5 years. That was another huge headline this week. The revenue trajectory is hard to overstate here, from $117 million in 2024 to a projected run rate of $7 to $9 billion by the end of this year, with real contracts, real customers, and real scale happening fast. But the risk is real too, though. They're not profitable yet. The stock is also already up over 300% in the past year, and they missed earnings last quarter. Analyst consensus sits around $157 against a current price near $116. This is the first name I added to my Bridget Spies watch list, started back in November, and it's up 33% since then. You can scan the QR code or just go to marketbeat.com/Bridget to follow along with many of the stocks we talk about on this channel. But today I am going to add some diversification to my watch list. Stock number 2 on this list, Mercado Libre, ticker MELI. If you're looking for a company that's already dominant, already very profitable, and still has an enormous runway to go, this is a great stock for you. Mercado Libre is the e-commerce and financial ecosystem for Latin America that handles payments, logistics, and lending. They've built the full stack in markets that are still in the early innings of digital adoption, and their revenue shows growing demand here, hitting $28.9 billion last year, up 39%. But here's why it's interesting right now, especially. With all of that growth, the stock is still down about 18% this year, and that's because a recent earnings miss has rattled some investors. But the structural story hasn't really changed, and the consensus price target shows a 68% upside from analysts. Latin America has hundreds of millions of people still moving towards digital commerce and financial services for the very first time. Mercado Libre has the brand, the infrastructure, and the flywheel to capture that shift. At this price point, you're getting a lot of company for the money. Now we are on to the number 1 stock on our list today, a company that most people still aren't thinking about, even though it's been been one of the biggest performing names in the market over the past year. This is an electronics manufacturing servicing company that's building the servers, switches, and networking hardware that the entire AI build-out depends on. Revenue hit $12.4 billion last year, and that's up 28%. Earnings per share nearly doubled, and they've beaten earnings estimates every single quarter. Yes, the stock is already up over 200% in the last year, but analyst targets do go as high as 440. Plus, 2027 earnings estimates keep moving higher. This is a company with real revenue, real profits, and a customer base that gets more dependent on them every time a new data center opens. Every AI model that gets trained, every GPU cluster that gets deployed, and every hyperscaler that scales up, this company is in the middle of all of it, and it's still not making many headlines yet. And that's where the real opportunity lies with Celestica, ticker CLS. If you're looking for other high-growth names, check out this video. It has 10 other high-growth potential stocks, and some of them I heard for the first time making this video. Take a look.